Martin, can you hear me? Good morning, Mark. Can you hear me now? Simon, can you hear me now? Can you hear me now? By Discord, guys, and then we can start. Share screen. All right. Still no. Try to reconnect or use online. Please like everyone else. Thank you. All right, let's start. Welcome to Tradespoon in the Yellow Tunnel. My name is Vlad Karpel. I'm CEO and founder of both companies. And today we're going to have a live trading room open to trade stock and options using our technology. For those of you who are new, welcome. If this is your first live event, do me a favor, tap in first. Always want to welcome new subscribers. Welcome on YouTube broadcast. If you're new to our YouTube channel, please click on subscribe. And if there are any of if the video is useful, you find it useful, please share it on social media by grabbing a link and post it on Facebook, Instagram, Telegram, and other channels. For everyone else, welcome back. I really appreciate your time commitment. This is my background. I've been trading over 15 years, mentoring and teaching subscribers for trade stock and options. My background is technology. I have a master's degree in computer science, specializing in statistics, artificial intelligence. We've been building financial models for over 20 years. So that's my background. Disclosures are very important. I'm going to go through specific trade ideas, so please look at the disclosures. Trading stock and options involve risk and not suitable for everyone. You must be aware of the risk and be willing to accept it in order to invest in current market conditions. I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm showing you what I do in my own account, based on my own risk tolerance level for general education information purposes only. Please consult your financial advisor prior to making any decisions. Also, should not be assumed that the future trade deals will be profitable or will equal past performance. All right. So very important, I'm going to just briefly, since I was a little late, apologize. Trading psychology is important, right? It's how you deal with your emotions. Emotional intelligence is very important. Self-awareness is extremely important. Where does it start? I propose trading journal, right? It's very, first of all, I think you need to have a routine, right? Reviewing the news, drink coffee. Now I walk the dog, meditate, whatever it is. Then you review the news, right? Pre-market news, where the market is heading, right? Usually it's very useful information, or any macroeconomic news, unemployment data, initial claims, ISM data. And then you go through these positive and negative visualizations, right? Because the idea that you can only control your own thoughts and actions. And I think the most important is how many positions do you have, and what is the most amount of risk you're willing to take in order to support your opinion on the market, right? Right now, VIX is down, sentiment is back up, so most people are bullish. Most retail investors are bullish right now, okay? That's fine. Market is close to the 52-week high. So you look at the chart, right? Like you look at the spider's chart. You basically have to decide, market is back above 50-day moving average. We're not that far from 52-week high. So what is your risk, right? Let's say you want to enter, market is slightly down at 448. You have two main support levels, these lines, right? One is 444, one is 432. We've been trading around these levels for many months. These are very important key levels. One is the 50-day moving average. One is June low, July low, August low. So multi-month low, very strong support. So those are your two levels, right? 444, your 50-day moving average, and 2 standard deviation lower Bollinger Band. So that's 5 points, right? If you buy at 448, right below that, 443. So this way, you have 5 points as your stop loss, right? If you go to 430, that's what? 18 points, right? 18, we'll call it right below that, 20 points. So then the second question, now that you identify your stop levels, I mean, first of all, positive visualization, right? People complain that I'm too negative. Okay, positive visualization. We're going to break through 460, right? Dell had a great earnings. Generative AI, looks like every day somebody is releasing some kind of generative AI plugin or update that will bring a lot of revenue to the company. So generative AI is here. Everybody talks about it. This is like the next revolution. So we're going to break above 460 level. Right, all-time highs around what, 480, 490. So that's your positive visualization. This is why you're buying. Negative visualization, glass half full versus glass half empty, right? Glass half full, you think market is heading to 460. If you look at the glass half empty, then you think it's going to drop. So, okay, so 5 points, 20 points. How much money am I willing to risk to support my opinion and generative AI, where the unemployment is very low? 200. I propose no more than 2.5%. My generative AI is not going anywhere. You don't have to risk all your money. You can just incrementally do that. So on the $10,000 account, I propose $250, right? 2.5%. On $5,000, $125. Right? Always the same risk, always the same position, always the same position size. You can speak to the 100 best traders in the world, they will tell you the same thing, right? It's number of position size, mechanical trading. You can write down your trading plan, give it to another trader, and have them execute it and be successful, right? So that would be my proposal in terms of shares, right? In terms of risk, right? Oh, I forgot to write. So if it's 5, if you're doing short-term trading, you're risking 5 points divided by 250. That's 50 shares. If you're risking 20 points, right, from 448 to 430, 18 points, 20 divided by 250, roughly 12 shares, right? 12 shares, right? The longer you wait, the less shares you are buying. The shorter the period of time, the more shares you buy, right? And it's just the way market works, right? Because over a longer period of time, market can fluctuate a lot more than over a short period of time, right? That's why it's just a statistical analysis. So meanwhile, it's all about interest rates, right? That hasn't changed. Yesterday, I think, the data wasn't updated for whatever reason. I don't know why. Some kind of delays. But we did have a strong rally yesterday in Treasury, right? 10-year Treasury. Maybe there was a much bigger delay. I would pay attention to DLT. But 10-year yield, again, rallied to almost to 4.3, right? Looks like it's dropping today. It's going down because TLT is up. But it's all about rate. We're successfully retested 4.08, bounced back, and that's putting pressure on the market. Same thing with the dollar. Dollar every day continues to grind higher. Looks like it's trying to hold to this breakout of June highs. Next level is March high, regional banks, right? And solvency issues. So we're approaching this level where people look at the market glass half empty, right? Higher interest rates, higher for longer. That narrative can change based on the news, right? So right now, in the next 15 minutes, we're going to have services PMI, right? Services PMI and ISM services, right? Different surveys. That any perception of interest rates for how long they're going to stay high will move the market, will move the dollar, will move the yield, and that internally will move equity markets, right? So that's what's important right now. It's not the earnings. It's not, we've seen NVIDIA had great earnings, but it's not going anywhere. Well, why? Because 10-year yield just continues to grind higher, and people are concerned that higher for longer is not good for equity evaluations. Meanwhile, QQQ down 40 basis points. Spiders continue to grind higher, right? The next level to watch is, again, 444, right? 444, that's your 50-day moving average. ISM data on services, right? That's always, we're service-driven economy. 75% of GDP comes from services. Same idea, right? If it's much higher, right, then idea that there is no signs of recession, market is stable, and you don't know what the reaction is, right? It could be that the 10-year yield obviously is going to go higher, right? And market is also going to sell off. But if manufacturing data, let's say, drops to much lower, right, 48, 49, same thing, right? Then, okay, maybe there's signs of recession. So, it could be that great ISM number is bad for the market, really bad, good data is bad for the market, bad data is bad for the market. But if it comes up with an expectation, 52%, okay, then maybe market is oversold and will bounce. So you really don't know, right? You don't know. So at that point, you basically have to be ready, right? This is where the idea of dichotomy of control, you want to make sure that you don't have more than 4 positions. Maybe you want to hedge. If you have a stock, usually, you can buy a put, right? Or you can sell a call against your stock position, right? But the most important is 4 position, not risking more than 2.5%. And at this point, I would say too bullish, too bearish. I think, September, October, probably not going to be much better than. Meanwhile, Russell 2000 is bouncing back slightly after yesterday's pullback. And what else? Energy kind of still slightly high, but the reverse. Gas is under pressure. Google, let's see. KRE is bouncing back slightly after yesterday. So it's a turnaround. But technology, right? Everything but technology got a pretty sharp pullback. You can see VTV is not that far from retesting August highs, August lows. So not that far. So everything but technology is probably going to retest the lows, right? And most likely break them, right? Most likely break them. And if it's not now, then it's, end of September, October, we'll see. Transportation is actually broke through August lows, right? Bouncing back now, but not a good sign. And same thing with industrials, but energy seems to hold positions better. And today it's reverse, right? It looks like stabilization and everything that sold off yesterday. Now technology is under pressure. All right, spiders down 40 basis points, banks down 30 basis points, technology down 36 basis points, and semis are down 20 basis points. Okay. In terms of model, again, it sees 449 support. We are trading below that level, right? Model thought that today we're going to hold this level. It doesn't look like we're holding this level. This is, the answer, when will the model change its opinion? If it's going to stay, if it's going to close, let's say, at these levels or below 449, model will turn bearish, but it needs data, right? One day doesn't set the trend. But if 1-2 days were below predicted low, then this vector is going to turn bearish, right? We did have a pretty strong rally from the August lows, right? So now you need, one day doesn't set the trend. Now 2 days, okay, vector is probably going to turn more negative. Any questions? Martin, you're back. Very good. Let's see, YouTube. Live trading. Okay. Honesty strategy. Reviewing. Six watching. All right. Let's see how's the resolution. Honesty strategy. Resolution could be better. So if we can do something about the resolution, that would be great. All right. Okay. Thanks. All right. So welcome on YouTube. Okay. All right, let's review the positions. All right, so in terms of, so I have bearish and bullish positions, right? I have both bearish and bullish positions. Let's review them. All right, so Eli Lilly continues to grind higher, right? It's all over the news almost on daily basis, and weight loss, medicine, right? Shots, Zempic, and competitors. So continues to grind higher, right? Outperforming the market. So that's one long position, just to stop, right? I don't have to be right on time as long as I'm right on direction. CVS. Right, CVS continues to look for a bottom. Right, we did. There was a big sell-off. I got caught in this pullback. It looks like it's stabilizing. Right, that's why buying half of the position, doing dollar cost average makes sense. And I'm waiting to see. There's two things: either it's going to try to close the gap, or if it's breaking the position. If I'm down more than $250, I would, on $10,000 portfolio, I would exit the position. Those are the two triggers. PDCO, same thing, got caught in earnings. It's retesting the low, but I do have 30 put, right? And actually the put, this is where there is a ratio spread, where at this point, if it continues to drop below $30, my position is actually increasing, right? I'm, able to recover more and more of my losses. So for now, I have 50 shares, one contract of PDCO. Same thing, similar to CVS, right? This is probably the low, right? As long as it stays about 29, you can, I think it's just going through the bottoming process. If it breaks through the lows, reactionary lows, then I would get out of the position. But for now, I'm watching, since if you do have a put, I would be, so if you have a put, then you're at maximum loss. You're actually gaining money if you have not one-to-one. If you're one-to-one, you're locked in, basically. You're not going to lose more, right? Because I have a 30 put. And expires September 15th, so I have time. Clorox, I trimmed half of the position. It's pulling back together with the market. I think XLP is extremely oversold. I do think it will bounce. Again, watching the lows, right, and potentially maybe buying back the shares that I sold. So it's another. So that's consumer staples. PWR to get sold off together with the market. I did trim half of the position, have half of it left. Looks like it's bouncing back. For now, I'm still on PWR. WDC is a new position, new stock position. It looks like it's outperforming the market, right? Apple is down 1.5%. WDC is flat, so that's good. That's the purpose for the model. GTLB, this is yesterday. We were talking about earnings. GTLB announced earnings. This is GitLab software. It does. What's it doing? Code repository, right, for developers, code repository and management, deployment, and Zscaler security. Both had good earnings. Zscaler slightly lower, GitLab up 5%, but very volatile stock. Zscaler didn't do because not enough premium, or implied volatility was not higher than historical volatility during earnings, so I decided not to take the risk. GitLab, I only did it in personal account, didn't do it in Yellow Tunnel. Again, very volatile. You get premium, right? I think we talked about sell and somebody call. You get a lot of premium, but stock can move 40–50%. I mean, it's semi-liquid, so that's another problem. So that's kind of, if you did it, I encourage, consider closing the short call spread or short call. If you didn't do it, but these are kind of the earnings from today. Meanwhile, it's all about Apple, right? Where Apple is going, this is where the rest of the market is going. Kind of successfully retested 50-day moving average, traded a few days above this, closed this initial gap, the breakdown from the lab, and now rolling over, right? Staying at the 50-day moving average. So market will follow Apple. And I think Apple will retest its lows just a matter of time, right? It could be next week, it could be 4 weeks from now, that's to be determined, but for now it doesn't look good. All right, meanwhile, spiders are slightly down off the session lows, QQQ down 20 basis points, and we do have recovery from the sectors that sold off the most yesterday. Any questions? All right, so let's just recap positions. If you're in Elite Circle, you can find them under Elite Circle. If you're part of Yellow Tunnel, we have two sites. And you can find these trades under respective services, either Dynamic Power Trader or Profit Accelerator or Earnings Power Trader. Those are the three places. So let's just trader log. So yesterday I did add the hedge, right? 360, 340 put. Been trading around this position. Close half of the position, now reopened. Because I think going into end of October, there will be more pressure to the downside. So that's one way to hedge the portfolio. Right? You can buy QQQ put spread, or you can buy inverse ETF. Right, SH, PSQ, 1-to-1 with spiders, QQQ. That would be one way to hedge. So that's the trade from yesterday. And I think WDC can, at least short term, can outperform the market. So that's why I'm long WDC. So we talk about Clorox, right? Consumer staples are, in general, under pressure. Together with the rest of the market, a lot of it has to do with interest rates, right? So you have this big A, B, and now C. I mean, I would watch the lows, right, and see if we're going to break year-to-date low on consumer staples. This is very sensitive to interest rates, just like utilities, just like the rest of the market. I thought it's actually going to outperform. It doesn't look like it did. But it's sitting on the main support and extremely oversold. Right, so you just need a trigger. The trigger can come from interest rates. Right, so 845. I don't know. I think this is all delay. 10-year yield. So 424. Okay, it's 424. Okay. So for now, it doesn't look like the yield is moving anywhere. How did services 845? So we did have service. I assume it came in kind of within expectation since there's not a lot of movement. So it's worse than expected. Okay, so global services PMI, August came in at 50.5, right on the edge of expansion and contraction. Estimated was 51, previous 51. So slightly lower, not significant. So for now, not a lot of price action in yield. TLT is almost flat. Dollar is slightly lower. Looks like QQQ is at session low. Support over the past few weeks is 375. So I would watch 375 on QQQ. Looks like it's a lot weaker on spiders because of the value stocks. They already broke through the support line. So next support is 444. All right. Any questions? PMI Ted, do you always see 945 reversal? I mean, no, I mean, I'm just looking at the, well, the news came out at 8:45, so I'm just looking at the reaction of everyone to the ISM data. Sorry, services PMI data, right? Then we're going to have ISM services at 10 a.m. So there's another data point that come in at 9 points, different survey, right? So this one came in, expectation was 51, and came in at 50.5. You know, if this is 52.5, if it comes in 52, maybe the, you know, then just market just, you know, no new information. Sometimes you have more reaction from the second data point, sometimes you're not, so it just depends. So we still have 9 more minutes to go. But for now, we are, I mean, looks like there's a gap, right, where it's session low in spiders. I'm just waiting. All right. So CLX, CVS, right, we talked about these stocks. Still long, right? KRE expires in September, right? We already have started a pullback yesterday, pretty sharp pullback in banks. So we'll see what the next move is in KRE. But for now, it does look a little bearish. It looks like it closed the gap, now makes new lows. So it's probably going to retest the lows, August lows soon. The question is, is it going to be in 2 weeks or not? That, not so sure. Because we do have a PMI data, I mean CPI data next week. So these are the hedges for the months of September. KRE, and same thing with XLF. Kind of tied together, same thing, close the gap, pull back, probably on its way to retest August lows. The question is September enough? One way to do this, you can close your trade, right? Take a small loss and then roll it into October. Roll it into October. There would be one other way to do it. We talked about LA Lilly. We talked about PDCO. PWR, September. I mean, September puts didn't work out, right? We didn't have a pullback in the first half of the year. So now I'm preparing for the pullback in the second half of the year by having 360, 340 put spread. SH, if you're not comfortable hedging using QQQ put spread, one way to hedge is buying SH. TLT, again, yield is a risk, but it's extremely overbought. In theory, it should pull back. But there's a risk of this final overshooting in yield and the dollar, right? So, but for now, still long TLT. We talked about Western Digital, still long Western Digital. We talked about bearish XLF put spread, and this will probably expire worthless unless there is a big rebound in the market. All right, so copper is under pressure today. Platinum, so precious metals, right? Silver continues to underperform. SPDR is close to session low. Let's see what else. And yield is kind of, well, I assume if TLT is up, then 30 years down, and this is just delayed. I don't know why it's so delayed now. We can do futures, Treasury, US Treasury. All trade. Bond futures. Why alter? So it looks like it's pulling back. TLT is up. Futures. Year Treasury bond futures. Yeah, it looks like they're going lower, and this is probably just for whatever reason, the past couple of days is delayed. So TLT is up, and looks like 20-year is down. So that makes more sense. So I just pay attention to TLT. Dollar is flat. QQQ is slightly lower. SPDR's slightly lower. And we have recovery in IWM. All right, and in 3 minutes we'll have ISM data. So what else is interesting? China is up today. Industrials had a sharp pullback, not that far from retesting August lows. Energy continues to outperform XLE, but probably final phase. I would not chase the energy personally. And then let's see. Healthcare kind of selling off precipitously. Kind of following consumer staples. Looks like PRE resume its pullback. PMI 50.5. Yes. Thank you, Bob. Nice gains on oil. Continues to go higher. Ted, thank you. All right. Any other questions? We do have a workshop tomorrow on Yellow Tunnel. What did I update the date? 97. Yes. So tomorrow, 12 p.m. Central. Please join us. Yellow Tunnel subscribers, you can find these trades under Dynamic Power Trader, right? And Profit Accelerator. All these orders as well. What else? Okay, now let's see what the. I guess we should find out what the ISM services looks like. Let's see any other news. We'll close this screen. Sorry about that. In terms of NVIDIA, question was on NVIDIA. I mean, this is a good, main proxy for the AI. I mean, Apple is down 2%, NVIDIA is down 2%. Looks like sell-off is accelerating, so maybe the PMI data came in, well, either a lot worse or a lot better. Probably not within expectation, but let's see. Lists. Okay, US ISM 54.5. Right, so it's a lot better than anticipated. Prices paid 58.9, so I assume yield is going to rally. Yeah, yield is going up. Yeah, looks like it's right. So again, I fear of higher for longer, and then you have this risk to the market that we're going to break through these October high levels. Right, we're retesting them again. Right, we've been consolidating, retesting them again, and this is a risk to the market. Right, so and everything else is reacting. Right. So it's clear, that it's all about interest rates and perception. How long will the rates stay elevated? And now you have technology spiders rolling over. And stocks like NVIDIA, Google, and Apple pulling back. Yeah, looks like QQQ broke through that level, so we can add back that QQQ short stock. Right, so I'm going to do trade stock. Let's look at my portfolio. So you can sell short QQQ, you can buy PSQ, whatever you feel more comfortable. Same thing. I mean, overhead resistance, I would probably say, I mean, August high, right? The break point, so 385. Right, so if you want to short 385, it's a 375. You have 10 points risk if you're shorting the stock, 10 points to the as a risk, right? Because you have a reversal, especially next week, going into the CPI data. Maybe it looks much better and inflation is going down. So 10 points to the risk and retest the lows at 354.20. So you have 1 to 2 risk reward ratio. If it does go up 10 points, I don't want to lose more than $250 on $10,000 account. So I propose to sell short 25 shares, right? And maybe just do half of it now and half if it continues to later. So kind of repeat the same trade if you're not comfortable. I mean, if you bought a put spread, you don't need to sell QQQ. A lot of people don't buy puts, so I'm just kind of repeating this trade. Right, I closed it at 357, now I'm reopening at 374. And see if we could revisit 357 again. All right, so next catalyst is, well, beige book, that beige book, right? That's the forward leading indicators that could also spark volatility at 2 p.m. I mean, initial claims, we have a lot of Fed speakers tomorrow. I think nothing's going to change. They're just going to say higher for longer, reiterate higher for longer. I mean, unit labor cost, this is all Q2. This is all in the Q2, so I don't know how much effect this have. So I assume the most important, now that services data is out the door, core CPI, right? Core CPI. And again, services is a very big part of the core CPI. If the services are up, maybe CPI is also not going as low as everybody wants. But the most important are the rates, right? I would watch the rates. That's not good if we do break that out, right? That it could trigger kind of a small panic sell-off, right? If we have breakout, because we are kind of in a very long. We haven't been at these rates since financial crisis of 2008. So I propose, hedging, right? You don't really know, right? On one hand, it's extremely overbought and should pull back. On the other hand, looks like higher for longer narrative, and it's a lot longer than most people anticipated. So then, too bullish, too bearish position, right? If you're still working on the process, you still don't trust the process, Then I would say too long, too short. You know, if you're trading stock, I gave an example of PSQ, SH. If you're trading options, okay, just put spreads, QQQ put spreads, or you know, both examples could work. Okay, any questions? So QQQ, sell short, right? This is sell short. And I would use dollar cost average. So let's talk about, we talked about stop level, right? We talked about stop level on QQQ. If it can close the gap, then I would probably get out, right? If we can close this gap around 384, August high. On the downside, next level of support, well, this level, right? This is where we are now. So if we do break through this level, next level would be, I don't know, maybe I would put maybe 1 or 2%. So 368. 368, 366 is probably the next level of support. 360, so 367. So I would buy to cover half of it. Buy to cover half of it at 368. And then buy to cover the second half if we revisit the lows, right? Go 358, 358. So maybe try to get 1.5%, 2% on half of the shares, and maybe 5, 6% on the second half of the shares. For now, it's oversold, right? It's getting to the resistance level around this previous breakout attempt. So I would watch 372, 374 though. Short-term oversold can bounce. You know, it depends how the next week looks. Silver, looks like silver also retesting August lows. Not that far away. Consumer staples turning positive. That's good. Crude oil still positive. I don't know if you guys have any questions. In a trading range, let's look at. So the question was casino stocks, like when are they trading in a range, or can they break out or break down? I mean, they're definitely in downtrend. Right, they're definitely trading. So downtrend, especially casinos that are exposed to China, right? They're kind of in trouble. It's below 200-day moving average, below 50-day moving average. You have this crossover, right? 50 and 200 to the downside. I mean, it's definitely trading in a range. It's a downward slope range. I think it's a pattern of continue having lower highs and lower lows. And you know, if I'm right and we do have a pullback in general market, right, we retest August lows, most likely this trend line will be broken, right? Most likely when at some point September, October is going to break this line and a little bit tougher, you know, pullback. If you're not exposed to China as much, I mean, Hilton looks like still holding on, but these are hotels, right? Resorts like Caesar. I mean, yeah, so last China, Caesar is still doing good, right? But I would be careful, right? I would be careful because, you know, you have the whole reopening, COVID reopening theme is kind of coming to an end, right? You see restaurants are falling through, right? Like McDonald's is losing ground, right? DRI, right? Because the pent-up demand, now that we are in September and summer's traveling is over, you can see the COVID theme is getting, it's unwound, right? You have jets kind of falling off the cliff, so nobody's traveling, but not as much. Or, you know, the pent-up demand is not going, like, normalizing, it's going back to the pre-pandemic levels. Right, so jets are falling off, and then cruise lines, right, like Carnival Cruise, you know, it's taking 20-30% pullback. So I think the COVID trade is getting kind of, you know, you want to fade that trade. It's going away. Kevin, S&P equally weighted EFT RSP. Thank you. Equally weighted should be doing better, right? Because right now the trades, the beat up stocks are, you know, your Nvidia of the world, right, and Apples of the world. They're taking a much bigger percentage, and they're selling off at a much higher rate. So equally weighted, S&P is doing much better. Doesn't mean it's just gonna, you know, it's gonna pull back less. It is gonna pull back. So if you want to short something, I mean, not the most popular trade. People get queasy when you say short Apple, but, you know, it looks like Apple and Nvidia are going to sell off more than, you know, your equal weighted S&P or QQQ. Thank you, Kevin. All right, Kevin, vaccine. For now, yeah. I mean, for now, I would be cautious, right? I would be cautious, right? Especially with rates going through the roof, dollar at 105 level. You know, this is all not a good signs. Not good signs. And spiders knocking on the door of 444 now, so, and 50-day moving average. So, I mean, it might hold, right? The pretty strong support at 444. We'll see if it holds or not. All right. Any other questions? AT&T. All right, 9:20. That's all I have. Thank you very much. Thank you on YouTube. Thank you on Discord. We do have a closing bell today, also broadcasted on YouTube. Scott will lead that, and I'll be back tomorrow morning. Thank you very much, and have a great day. Amazon unaffected by the lawsuit. Thank you, Bob. Jeff, what did I name my puppy? Luna. Luna. So thank you for asking. I'm going to write a blog, more blog on here. So if you go into the power trading and markets, you'll get my daily updates on Luna. That's how Luna looks. Thank you, Jeff. Kevin, thank you for your comments on politics. Appreciate it. Fox, have a great day. Jeff, nice. Thank you. Yeah, I actually got a personal trainer, right? I'm going to write a blog. I'm giving you, but I have a personal trainer. Luna has a personal trainer, and I'm kind of following. It's the same thing. Like I spend a week. She loves everybody but me. Like she's terrified because I'm big, scary looking guy. So it's been more than a week now. It's been a week and a half, and she just would not, I can't even touch her. And then when I walk, she runs away. So I got this personal trainer, and literally he showed me how to give her tricks and like hold the treats, right? And just slowly with the patience, just sit and wait, and then Luna comes, you give her a treat, and then pull closer to you so she can smell you, and kind of have a tug of war with this. It's like a beef jerky, but with dog treat. And literally in two classes now she just doesn't leave me, right? She knows that when I walk in, I'll have the street and we're gonna play this tug of war. So if you're considering trading, this coaching it does cost money. I can't believe how much money these dog trainers charge, probably more than we charge for one-on-one coaching. But the point is, you need a coaching, right? Everybody needs a coach. It doesn't matter what you're doing. Can I train her? Yeah, but maybe it takes me a couple more weeks. Maybe it takes me a couple more weeks or months, or maybe I never can teach her, right? So it's a good lesson. Just kind of reiterate some of the concepts, but for now, it's a lot of fun. All right. Thank you very much, and I will see you tomorrow morning.